Next, we discuss the balance sheet in detail. The definition given by AICPA, balance sheet is a list of balance of the assets and liabilities accounts. This asset depicts the positions of assets and liabilities of a specific business at a specific point of time. What is the importance of balance sheet? It helps to indicate the financial position of a firm. It provides information about the assets, liabilities and capital of the business, and it helps to know the solvency of the business, and it serves as the base for purchasing consideration of the business. Different ratios can be calculated from the balance sheet from the purpose of interpreting the business, and it helps to find out the working capital of the business. There should be some difference between the trial balance and the balance sheet. What is the difference between trial balance and the balance sheet? Trial balance, it consists the debit and credit side, but in the case of balance sheet, it shows the assets and liability side. The trial balance is prepared to check the arithmetical accuracy of ledger posting, and balance sheet is prepared to know the financial positions on a particular date. And trial balance shows the balance of ledger accounts, and the balance sheet shows the real and personal accounts only. Trial balance is prepared from various ledger accounts. It's prepared from trial balance, and the trial balance can be prepared at the end of each month, but it's prepared at the end of accounting period. It's not compulsory to prepare the trial balance, but it's compulsory to prepare the balance sheet. There is, according to the principles of marshalling, marshalling refers to the arrangement of assets and liabilities in the balance sheet in the following order. There should be two orders: are the liquidity order, permanency order. There should be a particular format for the balance sheet. The four columns allow that: liabilities, amount, assets, amount. In the liability column, we enter the current liabilities, long-term liabilities and the capital. In the asset column, we enter the current assets, long-term investments and the fixed assets. There are certain items which are included in the current assets. Which are the items included in the current assets? Cash in hand, cash at bank, prepaid expense, accrued income, bills receivable, sundry debtors, marketable security, closing stocks are under in the current asset. And the next, long-term investment. Next, fixed asset. What are the things are to be under the fixed asset? Motor vehicle, furniture and fixture, patent and trademarks, loose tools, plant and machinery, building, land, goodwill are under the fixed asset. Next, we go to the current liability. What is involved in the current liability? Bank overdraft, outstanding expense, bills payable, sundry creditors, income received in advance are under the current liability. Next, the long-term liabilities. Loans and reserves fall under the long-term liability. And capital. Along with capital, we add the net profit and less the drawings.